Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Losing shine. Gold extends losses in Asia following the biggest drop in 5 years as investors lock in gains after an unprecedented rally. JD Vance hails progress in the Gaza ceasefire deal during his trip to Israel, but the U.S. Vice President won't set a deadline for Hamas to disarm. And mixed messages. U.S. President Donald Trump reiterates he's hopeful of a deal with China, but also signals a meeting with his counterpart Xi Jinping may not happen at all. Well, it's just gone 8 a.m. across the Emirates. I'm Johannesburg in Dubai. If you woke up this morning and just looked at where the S&P ended, you would think it was a very calm, not tumultuous session at all for these stock markets. Not the case. Tremendous amount of volatility going through with plenty of comments geopolitically, with President Trump suggesting that this meeting with Xi may or may not happen. The meeting with Putin may or may not happen. We also had a massive slide in gold and silver. And so we're waking up this morning to perhaps a market that's a bit in hangover mode, some stabilization coming through. S&P futures leaning positive now. I should actually mention that Dow, despite all of the volatility, did make a record high yesterday. Even though we're paying close attention to the post-close results from Netflix and also the slide in Alphabet yesterday, too, on the tech side of things. So those have been key drivers, as we know, in the run-up to all of these stock markets. The USD also dropping a little bit today, despite all of the volatility around safe havens yesterday. Mild bid for the USD, but I will say that some of the currencies trading versus the U.S., so some of those high beta emerging market currencies like the South African rand sold off in tandem with the price action in gold, which leads me to what happened to gold. This morning, we are seeing now some stabilization, some green on the board. But of course, yesterday, a massive sell-off, almost 5 standard deviation move in the price of gold, a drop of 5.5%. Silver also down more than 7.1% in the session, too. And wild also moves in the Asia session. We're going to talk more about that shortly. But bottom line is, yesterday, we've been talking about the massive run-up in gold, in silver, and that it was outpacing some of those technicals, perhaps was due for a bit of a pullback. But the question is this just a minor correction or the beginning of a more sustained sell-off? So let's talk about that. Precious metal stocks are in focus this morning after gold and silver posted their steepest sell-offs in years. This comes as investors lock in profits and question some of those really rich valuations. That's bringing Garfield Reynolds, who leads our Markets Live coverage in Asia. Garfield, what exactly happened yesterday in gold and silver?
Well, I mean, what happened was very much a sell-off that everybody was wondering, when it would come. The moves in gold and silver had become so very overstretched, and without there being anything obvious to drive moves of that scope, other than just sheer momentum. There've been all those pictures and video footage of people queuing up around the world to buy gold, physical gold. And it felt like the market was sort of doing the same thing. Everybody was just queuing up to buy gold. Now, even if you might think that you expect gold over the next year or so to move higher, you would be telling yourself it can't keep on going up like this. And sure enough, it stopped going up and it came crashing down. There's plenty of signs that people decided to take some of the money off the table that they had already made, which makes a lot of sense. The big question now is, does that turn into a vicious cycle where sales beget more sales, or does it simply allow the market to reset and we look to determine whether those drivers that have helped to send gold to the record levels that it reached, i.e. strong demand from central banks, strong demand for gold as a haven against geopolitical and recession uncertainties, and also lower interest rates.
Yeah. One of the things that our colleague Anthony Stevens pointed out this morning is the worst performing sector yesterday were, well, not really sector, but type of trade yesterday was momentum trades. And if you look at, say, what has happened to gold, to crypto, to Bitcoin, even to the unprofitable tech basket, what you're seeing now perhaps is a pullback in all of these parts of the market. Is that perhaps a warning sign for broader indices here, and that we had reached extreme valuations, and these type of pullbacks can actually have knock-on effects more broadly?
Yeah, I think so, and it's a return of the concerns that had swirled for a while earlier this year about how markets in general had become overvalued, and that at some stage you're going to get a pullback because it's hard to justify everything unless you accept that AI is going to deliver massive profits in return for its massive investments. So in amongst all that, you had these various fear concerns, and the momentum question is the question in markets because, as Anthony was pointing out, that was the biggest negative factor overnight. It's been the weakest driver this week for the S&P, but at the same time, it's still the biggest positive driver year to date. So a lot of investors are on edge to see whether momentum is going to go on being their friend, or if the virtuous cycle of ever higher stocks is going to turn into a vicious one where a little bit of selling begets more selling.
Yeah, virtuous cycle turning into a vicious one. Let's see. Garfield Reynolds, who leads our MLive coverage in Asia. Well, President Trump has cast doubt on whether his anticipated meeting with China's Xi Jinping will happen later this month. Trump also says that without a deal, Chinese imports will face a tariff of about 155% as of November the 1st.
Right now, as of November 1st, China will have about 155% tariff put on it. And I don't think it's sustainable for them, so I want to be nice to China. But China's been very rough with us over the years.
For more on the outlook for U.S.-China trade ties, BNP Paribas FXLM Strategist Parisha Saimbi joins us now. I was just listening to those remarks out of President Trump, and I'm reminded of a Katy Perry song. It's hot and it's cold, and that is literally where we are right now. It does not seem like it's going to be a linear path for U.S. and China to get to that trade deal. It must be quite a difficult environment to navigate as a trader.
Will be choppy. There certainly will be a lot of headline risk, and we agree it won't be a linear path. But ultimately, we do think that both sides have been, this has been a strategic move, but ultimately we do expect that the two will come together. There will be some de-escalation, or at least we will see some extension of the continued trade environment rather than seeing the imposition of those higher tariffs that President Trump has threatened on China.
Let me ask you about the renminbi fixing and the fact that last week the PBOC allowed that fixing to drift below 7.1. What does that tell you about China's intentions ahead of that potential upcoming bilateral meeting?
Yeah, so clearly they've set the currency at a slightly stronger level, and below 710 is the first time since November of last year. So again, it's another show of perhaps strength going into those negotiations, perhaps that may take place at the APEC summit later this month. But ultimately, we do still think that the authorities in China are continuing to pursue a path of a stable currency. They want to continue to internationalize the renminbi, and together with ongoing deflationary pressures and a softening economy, we do still expect that the currency will remain relatively weak against the basket over the medium term. So yes, we've had a slight nudge lower in the fixing, but we don't expect that this is going to open the doors to a significant round of appreciation in the currency.
Okay, interesting. So if we put everything together, we've got perhaps a bumpy road towards an ultimate resolution between U.S. and China. We've got now global, potentially financial market volatility, pullback in some of those momentum trades that we were just talking about, including some of the unprofitable tech names. Does that make you a bit more cautious on putting on extra risk?
Yes, for here, I think we would be cautious at this stage, and we have reduced some of our dollar short positions in our portfolio. And at this point, we do favour holding carry more kind of RV strategies rather than taking a strong view on the dollar direction from here for the time being. But ultimately, we do, if we do end up in a scenario where the current trade environment persists and we don't see the imposition of those 100% tariffs on China, we do think ultimately the path is one of a soft patch for growth, and ultimately the Fed delivering these rate cuts should be supportive for risk in the end. But for now, the environment is likely to remain choppy, so we do take a more cautious stance for the time being. And what that means then, I guess, in one of our favoured views that we like is actually holding receivers within Asia rates markets. We do think that if we do see that kind of risk scenario evolve with higher tariffs being imposed, Asia, we think, in particular, will suffer the most and be the hardest hit from this. So we continue to like receive positions across many of the Asia rates markets.
Okay, so potentially positioning for a growth hit to some of those Asian economies. I want to turn you to one specific Asian economy. Big news out of Japan yesterday. We have a new prime minister, and of course the LDP are in a coalition with the Ishin party. Do you think that the fact that Takaishi-san is in a coalition with a very slim majority, that is going to limit how much fiscal spending she can actually deliver to the economy? And how do you see the ramifications for that on dollar yen?
We do think that there will be some limitations. One, because of the fact that there is a thin majority, or kind of not even quite a majority. The second is, if we look at Takaichi's policies, even in the run-up to this kind of campaign, she had moderated some of her initial positions on the fiscal outlook. And if we look at the JIP, they come from more of a fiscally conservative background and values. So there will be some degrees of limitations there. But I think ultimately all parties across the board agree that more policy support is needed in order to help households deal with the cost of living crisis and also to offset the impacts from tariffs. So we do think that there will be more fiscal support, and we expect maybe somewhere in the margin of a 15 trillion yen supplementary budget to be passed this year. And that could be in the form of some tax cuts as well, although we don't think that the consumption tax cut will necessarily proceed, but things like the gasoline tax cuts and perhaps a rise in the minimum threshold for taxable income regarding income tax could be supported, especially given that's something the DPP have been campaigning for.
Yeah. Thank you so much. That was BNP Paribas FXLM Strategist Parisha Saimbi. Thanks for joining the show. Well, switching over to this region, the IMF Middle East Director says Saudi Arabia's fiscal and current accounts would benefit most from a rebound in oil prices and production. Jihad Azour also told us how a changing world trade order is opening up new opportunities for the region.
We are seeing many changes taking place at the same time. Trade is changing, and there are a certain number of important transformations that could lead to a second round effect on the region. Yet the positive side of it is this new world trade order, a new world economic order, could open opportunities for countries in the region to increase their connectivities with new other economic groupings, but also to seek new opportunities. And this is something that we see some of the countries doing, especially in the Gulf, trading more with Africa, with Central Asia and Caucasus, and also strengthening their relationship historically with the region.
Oil prices right now as we speak, we have Brent close to around $61. How much downside risk does that pose to economic growth for the oil exporting countries next year if oil stays around this level?
Well, of course, those prices are beneficial to the oil importing countries. They reduce their negative impact on prices as well as also on their current account. For the oil exporting countries, the unwinding of the OPEC Plus cuts led to an increase in production by 2.2 million barrels. And this is continuing this year and next for mainly the GCC, because this is where the capacity still exists. And therefore, the increase in production compensated the drop in oil price. Yet, the surpluses, both in the current account and on the fiscal, will gradually narrow, which requires from those countries to continue their effort in diversifying revenues outside oil and making sure that their balance sheets are managed in a way that will preserve them from any shock that could occur that would lead to hike in interest rates or drop in international demand.
Yeah, well, earlier on you were talking about market access and the fact that there's been plenty of sovereign bond issuance this year, even corporate issuance out of the region as well. On Saudi Arabia specifically, and I believe they have been the most active EM issuer year to date, are you worried about how much extra debt Saudi Arabia is taking on, both on balance sheets and off balance sheets?
Well, Saudi has strong buffers, and also they have ample level of liquidity, which will allow them to address short-term and long-term issues. And throughout the last few years, they have done two important things. One is to diversify their revenues outside oil, and we see gradually this taking shape in a context of medium-term fiscal framework, but also, on the other hand, keeping their liquidity high. And recently also they have reprioritized some of their projects, part of a medium-term investment planning, which also provided additional positive sentiment in the market. Of course, the transformation of the economy will continue taking time, but I would say Saudi is on the right track.
That was the IMF Middle East Director, Jihad Azour, speaking to me around the launch of their regional economic outlook yesterday. And coming up, U.S. Vice President JD Vance says he remains optimistic about Gaza's fragile ceasefire despite violence over the weekend. We're live in Jerusalem next. This is Bloomberg. U.S. Vice President JD Vance says he remains optimistic about the future of a ceasefire between Israel and Hamas, despite a flare-up in violence over the weekend. Vance says the Gaza deal will require constant monitoring and supervision, but he will not set a deadline for Hamas to disarm.
I'm not going to do what the President of the United States has thus far refused to do, which is put an explicit deadline on it, because a lot of this stuff is difficult. A lot of this stuff is unpredictable. I feel very optimistic about where we are. Knock on wood, you never know how this stuff is going to go. But given what I've seen, given the incredible talent and effort that's going in to the reconstruction of Gaza, to the long-term security of the Gazans in that territory, I feel very good about where we are.
Joining us now is Bloomberg's Dan Williams in Jerusalem. Dan, just walk us through the takeaways of JD Vance's trip to Israel yesterday. Also notable timing, given the flaring up of tension over the weekend.
Indeed, the vice president arrived, as you heard just then. He's been counseling patience of the Israelis, of Israel. Israel is obviously the chief partner of the United States generally, and certainly in trying to push forward this Trump plan for peace in Gaza. Ironically, while counseling patience, the Americans have been demonstrating, well, a sense of urgency about maintaining that Israeli patience. To borrow from the world of basketball, we're seeing a full court press. Diplomatically, the US President Trump was here last week, effectively to launch that peace plan, or at least the ceasefire beginning the peace plan. He was followed by his two envoys who made repeat visits. That's Steve Witkoff and Jared Kushner. His vice president is now in Israel for a 3-day working visit. The details have not been made fully public, which suggests they're trying to keep some of it away from public scrutiny for now. And the Secretary of State, Marco Rubio, is expected later in the week. So really the Americans are applying personal energies into reassuring the Israelis about a ceasefire that has been troubled. I think one important disclosure given by Vance yesterday was on the issue of hostage bodies. Hamas was meant to have returned all hostage bodies, having returned all last living hostages last week, but that has lagged. Overnight, 2 more bodies were returned. That brings the number to 13 unaccounted for. For the first time in public, a senior official saying that all 13 may not be locatable at the current time. Vance said some might be under thousands of pounds of rubble. He said others may simply be in locations unknown for now. What's interesting is he's introduced into the discourse the possibility that everyone may move into the second stage without necessarily all bodies being recovered for now. That will be a very difficult realization for Israelis, and he may be asking them to confront it already in the understanding that such an acceptance by Israel may be required to move into the second stage, which everyone hopes, would lead to peace in the Gaza Strip.
Bloomberg's Dan Williams in Jerusalem. Thank you so much. And coming up, OpenAI is paying former investment bankers to train its AI on financial modeling, aiming to replace junior bankers' grunt work. We'll have more details next. This is Bloomberg. Welcome back to the show. Well, some breaking news. We have some earnings crossing from First Abu Dhabi Bank. And just to tell you that it is a massive beat. Third quarter operating income, 9.34 billion dirhams versus estimates of 8.89 billion dirhams. The profit came in at 5.39 billion dirhams versus estimates of 4.43. In terms of return on tangible equity, also beat 19.7% versus 17.9%. estimates, and then impairments also lower than expectations, 850 million dirhams versus estimates of 903. So a strong beat on top, bottom line, and impairments coming through from First Abu Dhabi Bank. And you can see year to date, the stock is up almost 20%. All right, OpenAI is said to be employing over 100 former investment bankers to train its AI in building financial models. Bloomberg has learned that the aim is to automate the intensive grunt work typically done by junior bankers. For more, we're joined by Bloomberg's Omar Al-Shmouri, who broke this story, major story, very interesting. It's called Project Mercury. What exactly are OpenAI doing?
Good morning, Jamana. Project Mercury is an effort by OpenAI to make its technology mimic the financial models done by investment bankers.
Yeah.
So they've contracted about 100 ex-investment bankers to write simple prompts and then execute financial models ranging from restructurings to IPOs. And this is followed by a review process, after which their work is plugged into OpenAI's system. And they're being paid about $150 an hour, which might not sound excessive, but it is the equivalent of about $300,000 a year for a 40-hour work week.
Yeah, but also participating, perhaps eliminating your future job by giving all this intel to OpenAI. Why is OpenAI doing this?
Right. So OpenAI has achieved a valuation of $500 billion earlier this month, making it the world's most valuable startup. But it is yet to turn a profit. So it's under increased pressure from both investors and competitors to come up for use cases for AI. And Project Mercury falls under these efforts.
Yeah. Well, ultimately, how's this going to impact investment banks?
Well, the article has been shared over 25,000 times, so clearly there's a lot
of interest.
Concern. On one hand, you've got people worried that it's going to replace the jobs of junior bankers, and by extension, they're also asking if junior bankers are sort of phased out, what's going to happen to senior ones? But to end on a more optimistic note, others think that it's going to augment the work of investment bankers instead of replacing them.
That's the hope. Bloomberg's Omar Al-Shmouri with that scoop on OpenAI. Well, coming up, we're going to be talking about trade with DHL Group. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Losing shine. Gold extends losses in Asia following the biggest drop in 5 years as investors lock in gains after an unprecedented rally. JD Vance hails progress in the Gaza ceasefire deal during his trip to Israel, but the U.S. Vice President won't set a deadline for Hamas to disarm. And in a moment, we speak to DHL Group CEO Tobias Meyer on the state of global trade and what the delivery giant has planned for the Middle East and Africa. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai, getting you up to speed on these markets. Well, yesterday, the Dow actually made an all-time record high, and the S&P managed to close out flat. So you would think that it was a quiet session, but actually belying a lot of underlying volatility, particularly in those safe havens, gold and silver. You can see there's stabilization coming through in the Asian session, but a massive shakeout of positioning yesterday. In gold, we dropped around 5%, more than a 4.7 standard deviation per city in one day. So it speaks of massive amounts of liquidations that went through. Silver as well, dropping around 7%. We are seeing some stabilization this morning, but of course the question is whether this is going to lead to a deeper, broader rout. Just to point out, the USD isn't doing a whole lot today, but any currencies that have somewhat of an exposure to mining, to gold, suffered as a consequence of the shakeout in gold. And we saw that in the South African rand, one of the currencies that got hit by this sell-off. But it's not just gold and silver. Let's switch over. And this is something that our colleague Anthony Stevens flagged this morning, which is that in terms of factors, it is the momentum factor that suffered the most yesterday. So a lot of these momentum plays, and you talk about money going into not just gold, but into Bitcoin as well. You can see the blue one is Bitcoin. It already started to crack over the course of the last couple of days. And some of those unprofitable tech names, that's a basket that's tracked by Goldman, all of those very strong momentum plays have started to sell off a little bit. So perhaps speaks to positioning trimming that may go on in coming sessions. Something to be mindful of as momentum plays begin to come under pressure. But let's talk a bit more about trade. DHL Group plans to invest more than 500 million euros in the Middle East over the next 5 years, with a key focus on UAE and Saudi Arabia. The logistics giant sees the United Arab Emirates as a key logistics hub connecting Asia, Europe, and Africa. For more, we're now joined by Tobias Meyer, the CEO of DHL Group. Really good to have you with us. I will ask you about your investment and initiatives in Middle East and Africa. But I'm sure the main question that everyone's been asking you is just simply, what are you seeing in terms of trade flows this year? Because this has been a year where we have not stopped talking about protectionism, about tariffs, about trade war. How has it actually translated to merchandise volume?
Well, thank you for having me this morning. And indeed, a lot going on this year as it comes to trade. The negative, much reported on, you just referred to it, significant changes in U.S. trade policy, tariffs imposed by the president, and that has an effect on our customers first and foremost that are under pressure. We see that in the Chinese-U.S. trade, but also U.S. exporters under pressure due to higher prices for input factors. But I think there's an important part of the story that we shouldn't miss, and for us, really, the September figures of China's exports were quite extraordinary.
Yeah, that's true.
If you look at that, significant growth, despite a drop of 27% on the U.S. trade lane, overall up 8%, with strong growth to Europe, with strong growth to Southeast Asia, with strong growth here to the region, to Middle East, but especially to Africa.
Do you think that's going to hold up into 2026? What's your forecast for next year?
We do think that this will be the case because China has built competitive value chains, especially in manufacturing, not only electronics, as we've seen this for a while, but also in industrial segments, in automotive. So these are the goods that are now exported into other parts of the world.
I was on a World Economic Forum trade panel last week, and I had the UAE trade minister with us, and he said, this really beautiful analogy, he said, trade is like water, it will find a way to flow. It will find a way to flow around the various obstacles. But I do wonder whether what we're seeing out of the U.S. and these tariffs have actually opened up opportunities in other parts of the world in terms of enhancing inter-regional trade. Are you seeing that? Are you seeing more economic blocks increase the amount of trades that countries are having with each other as opposed to globally?
Yes and no. So the average distance of trade has not shortened.
Okay.
And that was not what some people expected. And that is mainly because of that China trade we talked about. China to South America, one of the longest trade lanes on the planet. Nigeria, now the dominant trading partner being China. So these are the flows that are very long and that continue to grow. But also, yes, here for the Middle East especially, we see stronger ties between the GCC countries. We see stronger ties within the regions. And we think this is a good thing.
Yeah, so your company in your prior earnings, you've talked about a focus on efficiency improvements and growth markets. Let me ask you about the growth markets. Are they in the Middle East? Hence, some of the investment that you're putting into this region and also into Africa as well.
Absolutely. We have two axes that we look at. The geographic one, we have 20 countries that we think will benefit also from the geopolitical trends that we're currently seeing. These are the ones we focus on especially. Saudi, for instance, is part of that. But we also have a sector focus. We look at life science and healthcare. Many in our industry do that, but we have a very specific focus connecting the different modes of transportation, our warehousing and distribution capabilities that we have, which really helps to make pharma supply chains shorter, more efficient. We have e-commerce being now a third of the group's revenue. So these are specific industry focus sectors.
Yeah, and to meet some of that expected rising demand, Are you buying more freighter planes? I mean, how does it work out in terms of the additional capacity that you may need?
So we had a program now for several years. We upgraded our intercontinental fleet especially. We operate the largest fleet now of Boeing 777 freighters, for instance. This is important to us to deliver quality, but also sustainability. These are the most fuel-efficient planes in our industry. So that's what we focus on. We have the capacity. What we're particularly excited about here in the region is the warehousing and distribution capability. Yeah. We really think this can make a difference to some supply chain, to some industries. So that's a very specific focus.
And what visibility do you have on pricing power as well? Because I know that that has also been one of the key focuses, improving some of that operational efficiency, either by reducing costs or by introducing slightly higher prices. What visibility do you have for this part of the world on pricing?
Well, we need to obviously manage capacity. This hasn't been easy this year for our customers, for ourselves, if you look at the redeployment that we did from the Trans-Pacific. So it is a very volatile world. We try to be a good partner to our customers to keep an outlook, to not be too erratic in what we have to do in terms of pricing. But it's not easy in this volatile world. What's important for us here in the region is we want to continue to grow. We have really big ambitions, and we want to follow through with that with significant investments.
Yeah, and finally, let me just ask you, when you talk about some of the warehousing and logistics opportunities over here, which parts of the world are you expecting to take advantage of that in terms of trades? Is it global? Is it both east and west, or is it more again localized?
Well, I do think we need to see that with the change in U.S. trade policy, there is a certain decoupling of the U.S. From the rest of the world when it comes to its economic ties. It's not only import substitution. Those tariffs increase the cost of input factors, make U.S. exporters less competitive. And this is a void that others fill, particularly Chinese companies, not only selling globally, but now also manufacturing globally. We see really not only global distribution structures out of Asia and out of China, but we see global manufacturing networks as traditionally operated by Western OEMs. So this is a substantial change, which the Middle East is also part of, having strong champions and having a strong consumer base.
Well, I suspect we'll see you back here more often then. Really good to chat to you. Tobias Meyer, the CEO of DHL Group. Well, African electric mobility firm Spiro has raised a landmark $100 million, which is one of the biggest investments in the continent's EV sector. We spoke to Gagan Gupta, chairman of Spiro's parent company Equitane, who told us there's strong investor appetite for new energy projects, both within Africa and abroad.
This round, you have $75 million, which is coming from FEDA, and $25 million from other private equity investors. So it's a mix of, DFI as well as private equity investors. And as you mentioned, you would have seen in case of Arise, we started with DFIs, where, we had AFC and AfriExim. But the last round, we had Vision Invest, which is a Saudi, investment arm. They came and invested. In that round, we raised about $7 million. So I think what we have typically seen in our business is we put our money, execute it, bring DFIs, then bring others also on board.
You mentioned Saudi, of course, being one of the backers. Are you noticing interest, though, from investors outside of the continent, outside of the Gulf, or is that really where you're being able to mobilize a lot of this capital?
So I would say that, primarily there's enough capital available within the continent to invest in projects which are financially viable and which are impactful. And that's how, we have seen our businesses. In Arise case, definitively, we had significant interest from Saudi investor, Vision Invest, to come and invest, because they clearly see that in future manufacturing is going to come more and more to Africa as the population is definitely there's market as well as resources being there. So we're seeing significant traction from outside also, but mostly I would say in projects which are already not in greenfield but in brownfield, or in projects which are quite advanced stages and not in greenfield project.
Where else are you noticing some of that interest? Because there are a lot of startups that are finding it a little bit difficult to mobilize capital. Where are you seeing the most interest?
No, again, as I mentioned, we see that if your projects are far advanced and executed, it's not that you're raising in a greenfield project which is just starting up. So, for example, in case of Arise or in case of Spiro, these both projects are significantly advanced. For example, in case of Spiro, We have 60,000 bikes already deployed. We have over 1,500 swap stations already there. We have over 2,000 people that work. So we have done 26 million swaps. So it's not a project which is just initiating. This project has been there for business been there for last 4 years. This year, business is on track to do $100 million of top line. So then people clearly see that they have taken the execution risk, they have taken out the business model risk, and then significant roll-up has happened. Then you see interest across, be it Asia, be it Middle East, people willing to invest in a company in such projects. And same is the case in case of Arise. We have 14 countries already there, multiple customers already operating, success stories in Gabon, Benin, Togo. So then investors see, okay, this model works, very good execution team, and therefore they're able to deploy more capital.
Equitane CEO Gagan Gupta speaking to Bloomberg's Jennifer Zabazaja. And coming up, we'll talk to Dana Gas CEO Richard Hall about a gas expansion project in Kurdistan and what it means for Iraq. That's next. This is Bloomberg. Dana Gas has started commercial gas sales from an expansion project at its Khormor facility in Kurdistan, boosting output by 50%. The $1.1 billion project will help the Kurdistan region deliver 24-hour electricity while improving supply to other regions of Iraq. Dana Gas CEO Richard Hall is with us now. So this has been a multi-year project completed now. How much more capacity can we expect from the project expansion?
Oh, well, good morning, Joanna. I'm Richard Hall, as you said, CEO of Dana Gas. I've been here in the seat for about 2 years now, so I'm very pleased to be here to talk to you. In terms of capacity boost, as you said, it's 50% capacity boost in terms of gas alone.
Yeah.
What that also means is we'll be producing more condensate. That's about 7,000 barrels a day of condensate gross extra. 460 tons a day of LPG extra, which is all helping the economy of Kurdistan and Iraq in general.
Yeah, so you're also going to export to or sell within Iraq as well?
At the moment, the gas sales are very much within the Kurdistan region. Condensate itself, we have an off-taker and they sell where they want to sell to, but we have an off-take agreement which allows us then to just sell directly,
okay.
And they then take the product to wherever they want to go.
Do you have any plans to export outside of Iraq?
At the moment, no, but there is always that possibility, and we'd like to see that possibility come up in future. We're always looking at diversification of customer base, and indeed of assets, really. Yeah. So that's the Dana Gas
The reason
strategy.
I bring that up is obviously, there was tension between the federal, Kurdistan versus the states, specifically around the oil pipeline. Did that have any knock-on effects in terms of your own plans and your visibility vis-a-vis what you'll be able to do eventually with your own gas exports? Yeah,
it's a good question. There's always that tension there. For us, we're kind of isolated from that. We weren't really involved in the oil pipeline because we are a gas provider, gas provider alone. We have our own pipeline system, which is all in the Kurdistan region. There is the possibility to export at some point, but that has to be done with the acceptance of all parties.
Yeah. Do you feel like that situation on the oil pipeline is fully resolved now?
I don't think we would say it was fully resolved. And again, it's got limited impact on us. We're kind of isolated from that. We're isolated from oil price fluctuations to a large extent because we have a small oil price component within our gas price. But we're kind of isolated from it.
Okay, so your operations primarily focus in Kurdistan for the time being. Are you looking at projects in perhaps in Iraq? I know there were some talks around projects in southern part of Iraq. Where are they going?
We're looking in the region in general. So we'd like to, our ambition as Dana Gas now, that we've proven ourselves to be a deliverer of complex projects alongside our partner company Crescent. We would like to use that capability and leverage on that to get more opportunities within the region, within the MENA region. So we're looking in general, not just southern Iraq.
Yeah. How do you see the demand picture evolving in the region for gas?
Demand for gas is huge.
Why?
Huge, huge, huge. It's a displacement fuel. It's a transition fuel essentially. So in us alone, over the course of our long time in Kurdistan, we've displaced effectively, or we've avoided the Kurds using 60 million or producing 60 million tons of CO2 alone by just using gas instead of diesel or heavy fuel oil.
Yeah.
It's the same throughout the region. And gas is obviously a chief component of power, power generation, it's a gas as a feedstock for industry, and it's also an export for many, many countries. So there's a big gas demand.
Yeah, some analysts, a lot smarter than myself, experts in the industry, have been warning about a potential glut of LNG supplies coming to the market over the next 6 months, or the next 12 months, possibly. How do you see the possibility of that happening?
For us, it's not really relevant because LNG is expensive. You're talking like $13 per M equivalent. Indigenous gas you can produce for $2 to $3. So everyone should be producing their indigenous gas as much as they can.
So that isn't likely to impact your future investment plans or your future profits?
Not at all.
Yeah.
Not at all.
Okay.
No. So in Egypt, for instance, our gas production there helps the economy because we're producing internally as opposed to them importing LNG. And even if there was a glut and the price went down, it's not going to get anywhere near that price.
Okay, finally, I had a look at your stock price. There's been a bit of a run-up in the stock price recently. What do you point that down to?
I think people are seeing our general capability, but also we've got a sustainable dividend policy now, which we brought in this year. We paid out $105 million in dividend. Our cash flow projections for next year are very, very strong based on what we're going to do in Kurdistan. Our ambitions are very clear. We've got other things in the pipeline. We're talking about, well, we're not talking, we're actually bringing a unit into Abu Dhabi soon, which will make graphene from gas. So, we're very innovative, we're very active. We've got 2 rigs running in Egypt. We're doing all this work in Kurdistan. We've got ambitions elsewhere within the region. So I think people are seeing there's a good stock story here, sustainable dividend, big cash flow.
Okay. Could we expect any news anytime soon, new news?
I hope so, yes.
All right,
I'll be back on your show, hopefully, if there is.
We'll leave it there. Richard Hall, CEO of Dana Gas, thank you so much for coming on.
Thank you.
Now, coming up, the World Bank will resume lending to Uganda 2 years after halting support to the East African nation over its anti-LGBTQ laws. We'll have more details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai. The World Bank will resume lending to Uganda with a commitment of more than $2 billion. The Washington-based institution halted support to the East African nation 2 years ago over its anti-LGBTQ laws. The funding will support infrastructure, mineral development, and renewable energy projects as part of Uganda's economic growth strategy. For more, Bloomberg's Ondiro Ganga joins us now. Ondiro, well, we covered this story when the lending was up for debate. What does the resumption of funding from the World Bank and the IMF mean for Uganda's economy and its global standing now?
Good morning, Juman. I put them back on track with the development agenda. In the intro, you mentioned some of the areas that they want to focus on, and this ties with their goal and plan that they launched in 2023 to grow their economy to $500 billion by the year 2040. And they'll be focusing on certain sectors: agro-industrialization, tourism, trade, renewable energy, and natural resources. And so this money is very critical. Part of that World Bank funding will go into some of these areas. For example, building of infrastructure to enable these sectors come to life, and money from IFC will go into natural resources and also renewable energy. And this is very critical because, remember, Uganda has been out in the cold for a while, ever since they passed this controversial anti-LGBTQ law that proposes the death penalty on aggravated homosexuality. They've been locked out of international funding, and as a result, this is a country that has had to rely on the domestic market heavily. At that, public debt ballooned by 26% just in the financial year ending June, and it's because they borrowed from the domestic market by 53% in comparison to 6% from the external market. And if you look at this keenly, you'll realize that they're crowding out the private sector, slowing down growth. And because there's no checks and balances with money like this, who's to say that development will come, all while ballooning public debt and increasing debt burden in the country? So it's really important. And also it signals some form of confidence despite the fact that there are human rights concerns. I think international organizations are beginning to find that sweet spot between sanctions, particularly short, sharp and targeted sanctions, and economic stability in the region.
Yeah. I mean, if you go back to the funding freeze itself, is it fair to say it achieved its purpose? Will it deter other countries from implementing similar laws?
Absolutely. Just 6 months after the bill was passed, Uganda lost $1.6 billion, and this is in trade, tourism, FDI, loans, grant, and aid. And this is 3.2% of GDP. You can imagine what would have happened over a long period of time. Actually, the Open for Business report said the country stood to lose up to $8 billion in a period of 5 years. Should this bill continue to exist, and should the international community continue to push back? So this is just a financial cost that the country cannot afford to absorb. And Ghana also tried to charter these waters, and they quickly learned that they cannot travel this trail because the Ministry of Finance quickly wrote to Parliament and said, you will jeopardize $6 billion coming from the World Bank and the IMF. You'll complicate our $20 billion debt restructuring. And even though the former president did not sign the bill when he left office, President John Mahama currently has no intentions, because he understands the economic trade-off is far bigger than whatever political mileage they're actually going to gain. So while African countries, 30 of them have passed anti-LGBTQ law, right now they understand that US is cutting aid, China is cutting back on funding, trade is more complicated than ever. You rattle your international partners, you're going to pay very dearly.
Yeah. Bloomberg's Andiro Ganga in Kigali, Rwanda. Thank you for bringing that story to us and wrapping up a conversation that's been going on over the last 12 months. Okay, a quick look at equity futures. This is where we're at. Things are stabilizing despite the huge pullback in liquidations we had in silver and gold yesterday. S&P up 0.2%. European markets leaning towards negative, however, down about 0.33%. That is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for day